Welcome to week 18 of my Trading for a Living challenge, where the goal is to make over $1,000 every single week trading an option strategy called the wheel strategy. And what we're going to do in this particular video is go through all the numbers, the income, the trades, the charts for week 18. And for those of you who've been watching week over week, will notice that my balance available to trade has dropped significantly, which can only mean that I've placed another trade. So we'll go through all of that in this video. And if you are new, the link is down below for the full playlist so you can catch yourselves up all the way up to week 1. Make sure you like, subscribe, comment, all that good stuff, and let's get into it. So week 18, I was slightly disappointed that I missed the weekly goal by $18, so down 2%. I'll make it assume that I've hit it. And what I just noticed when putting this together, that every single week I've managed to hit, every single month I've at least managed once a month to hit the target. It always seems to be the last week, bar obviously the first ever week I started, I managed to hit the target. So it's probably good tracking this. Whereas from a consistency point of view, I build up a gap and then I'm like, I need to at least hit the target. So I'd never really thought about this until I've seen it visually on the screen. So that's kind of how we performed for week 18. And we'll go through all the trades that made that $1,011. If we look at it from a cumulative point of view, we dropped slightly, the absolute increase, but we dropped slightly from a percentage point of view down to 15%, where so far in 18 weeks, I have collected over $15,500. I should be at 18,500, but considering that I have only spent, what's that? What's the sum there? 12.75 hours on this, on actually trading and deciding where to, sell the put option or sell a call option, compared to if I was at a day job, 707 hours to only have 2.7K difference. It's not the worst trade-off in the world, being behind by 2.7K and gaining quite a few hours in return. So really comfortable with this at the moment. Like I said, this was always a goal to aspire to it. I've conceded based on the options I've been assigned and the shares I currently hold now. I'm not going to hit the overall target of 53K. I just need to get as close as I can. And as I've always said, the minimum is $2,500 a month to pay for bills, utilities, mortgage, etc. And I've done that consistently every single month, and I'm nearly there with 2 weeks to go. So really comfortable with where things are from that perspective. So let's head over to the trades that I placed. Now, let's look at Tesla. Tesla, as we all know, sorry, we own 300 shares at $282, and Tesla currently is trading at 180. So I'm quite behind on the shares. So what's that made me do is to sell covered calls below my cost basis. I've been doing that ever since I've been assigned the 300 shares. You can see 282, 240, 235, 222. And now as Tesla continues to drop, I'm now down to 190. So what we did in week 18, fairly easy to close. It cost me $42 to buy back the call option. And then I opened a brand new call option. And for the first time in a long time, I managed to put my strike up because Tesla started to jump up slightly on the Friday, which made it very easy to roll this up and out. And I picked up $330 per contract times by 3, $990. And as always, I always share the trades over here, so you can pause the video, have a look at that if you're interested in having a look. So before we talk about Meta, let's have a look at the charts and where we are. So as I mentioned in the last video, we started to get bullish divergence where Tesla was making lower lows, but the RSI oscillator was making lower highs. So that is an indication of bullish divergence. And we pretty much got that there. And as I mentioned, Tesla had a bit of a rally towards the end of the week. So that again made it very easy to kind of roll this option. at the time when I rolled this, I wanted to make sure that we were above this kind of pivot point, which is why I selected the 190. We're at 180, pre-market 181. So what's that? It's a 5-ish% move. I'm still out of the money, which for Tesla, they can do that in an hour if they really wanted to. But nowadays it's trending 5% lower every single day. And again, we're kind of trading within this kind of channel over here. And what my plan is, and it's again similar to Meta, let's assume Tesla decides to go back up. I want to sell my covered calls just outside the price and kind of trail it up as time goes on. But for me, I think what's probably going to happen, we're probably going to fizzle out, may go down, may go up, depending if we get some sort of a Santa Claus rally. So comment down below if you've got a view on where you think Tesla's going to go. But again, this is why I love this. There is a risk I can get called away early. It has happened before, only on the put side, not on the call side. And because we're more bearish than bullish, it's more likely people that are buying my calls are speculating on options and not looking to buy my shares of Tesla. So I think I'm okay from that perspective. But if I wasn't trading options and I was just holding the stock, I would just have this massive loss, which I still got as an unrealized. However, I wouldn't be making any money. And if I was growing this portfolio and I was in this situation, I would be, more working out where my break even is and cost basis and all that kind of good stuff. And I'm probably, I don't know, probably around the 220 if I had to guess where my break even or cost basis is. But because I'm withdrawing it as income, I don't have that luxury of trying to cost average down with the premium I gain to get out of the trade. So hopefully that all makes sense. Again, if you've got any questions, email me or drop me a comment down below. Meta. So I flirted with the idea of doing another Meta put last week, but I took the plunge and did it today. So just to keep you guys updated on Meta, I own 200 shares. I got assigned at 155 and at 154. So Meta, after the CPI report, went up massively, and my covered call on those 200 shares is kind of sinking in the money at the moment. So to keep you guys on where Meta is, so you can follow along. Meta is currently trading at 109, and I have a covered call that I did for 2 weeks. I think it was week 15, 16, 17, about 3 weeks. I had to do this covered call at the same strike at 95. So this expires this week. So I need to do something. Meta has dropped since when I did it. So I probably will have to do it again at 95 for another month. Or if I can get to 96 and it doesn't cost me that much more to roll that option, I will do that. But at the same time, so I had no trades in week 17. But week 18 for last week, I decided to sell another put option at the 106 strike. So if we look at what Meta's been doing, there's that massive rise up, which made this 95 call go deep in the money, had to do it around pretty much at the high. As you can see, it's tailed off and flirting with its November pivot at the moment. Really interested to see whether the December pivot opens up. And then I decided to do the 106 put option below this pivot level. So this is a missed pivot. If it's going to continue dropping, it should get some resistance around there. So I'm quite close. I'm only $3 out, which doesn't seem that far. But then again, I'm comfortable. If it stays around in the money, I can roll this down and out. Again, might not pick up as much of a net credit as I would like to, but I wanted to pick up a cheeky $63 in return. So with the $63 and the net of 948, that gets us to the $1,011 for week 18. So as you can see here, I've only got 1,700 left, so I haven't really got any more trades available. And it's same, just keep going really until something happens or the market turns in such a way. I am conscious if Tesla does take a massive spike up, I would really struggle in this challenge because as it's always been the majority of the income. So what was it? 948 of the 11, 10, 11, 948 divided by 10, 11, 93% is probably the same throughout the challenge, has been from Tesla. And Tesla's been kind to me from a option premium perspective most of the time. It just hasn't gone in the right direction where I need it to go. So I am conscious that if there is a bull move at some point in Tesla, then I could be in the same situation with Meta where I'm struggling to make any money. So that's why I wanted to get that 10.6K working for me. Even if it is $63, it could potentially help me down the line. I'm not envisioning other massive drops in Meta. There's no earnings there. So I should be able to manage this 106 put as long as it doesn't go too far away from me. So that's the update for week 18. Hopefully you guys are enjoying this challenge at the moment. Please make sure you check out the video that is on the screen now about rolling options. To get results like I'm getting, you need to be able to learn to roll option, especially if you get in the money on an option, on a call or on a put, kind of what I've been happening with the Meta. So check that video out and I shall see you guys in the next one.